Hi everybody, I'm Hector Garcia. I'm here with two of my heroes, Ron Baker and Ed Kless.
Shouldn't have heroes.
Sure.
And if you do, you shouldn't meet them.
Well, at least people I look up to a lot. Consequently, they're the co-hosts of one of my favorite podcasts called The Soul of Enterprise. And they're put together a conference called From Firefighting to Fire Insurance. And it's all about transforming our business models into subscription-based, which is something that I'm working on. I don't have any of the answers. Looking for them, looking for more questions. So Ed, maybe I'll start with you.
Yep.
Can you explain the title?
The fire insurance, so from firefighting to fire insurance. Yeah, the short story is that I had two uncles who were firefighters, and firefighters are weird people, right? Because what they do is they actually run into burning buildings, right? And that's a weird thing. And I noticed this observation with the folks that do software is that when their customers had the equivalent of a fire, which is some error message popping up on the screen or whatever, and you actually get physically repulsed from it, right? They'll kind of move back. But we as technologists were like, let me see that. Let me. If they, I've got a problem with this thing, and we want to engage. So in some sense, we are fighting those fires, the metaphorical fires. Thing is, though, is that when you're fighting these fires, there's a little piece of you, like with my uncles, who they love when the bell goes off, right? Not that they want to see people hurt or property damage, but it's doing what they love, fighting those fires. And far too many professionals have gotten caught in this trap of thinking that I wait for the problems to happen and then I fix them, right? And it's part of it because we want to feel good about ourselves. We want to feel that we're having purpose in meeting and we can fix people's problems. But the question then becomes, as technology progresses, is what would customers pay for if they didn't have problems? And that's moving to the insurance model, to saying, hey, what's going to happen here is we're going to pay us on a subscription basis, but you're not going to have problems. You're not going to have issues. We're going to make sure that it goes well, and we're going to be there to give you additional stuff and support. And if you were to say to my uncles, hey, Rich, Jimmy, that are their names, we don't want you to fight fires anymore. We want you to sell fire insurance. They would have been horrified.
Right.
And I think that there's a piece of professional organizations, a piece of professionals that when we're starting to sell this message about selling insurance instead of fighting fires, they're like, but I want to go fix the problem. Right? That's what I want to do. So it's not only a change of business model, it's a change of mindset.
Right.
A complete change of mindset that's going to happen, and therefore that changes then this business model around the notion of subscription.
Right. So it's the metaphorical insurance that we're selling.
Yep.
Is the assurance, and obviously that's a complicated word in my industry. Is the assurance that the outcomes will be in place, and what you're buying is that outcome or that assurance that the outcome would be what we're responsible for delivering. And in exchange, we charge a flat subscription, whether it's monthly, quarterly, or annual. And Ron, you've been talking about value pricing forever, and even before I started practicing. And to me, that was my mantra. A lot of when I heard about value pricing, it changed the way I thought about customers. And it's all about pricing the customer, not the service. And I've changed my model around that. Like I look at every deal, and I try to make sure I understand how much it's worth to the customer. And I price it accordingly, and I almost look at every deal as its own. Okay, so how much is it worth to the customer? Can I deliver that value? Is that value economically feasible for me to invest my resources on? And I look at it deal by deal. But with this subscription service, this kind of changes how things work. I mean, that equation doesn't seem to jive anymore. So how does this compare to what you've been talking about value pricing?
Right, it does blow it up. I mean, value pricing, I call this value pricing 2.0, and rather than pricing the customer, we're talking about pricing the portfolio. And the portfolio is like the things that you talked about and Ed talked about, the peace of mind, that we're going to prevent problems, right? If problems do come up, despite our best efforts, we're going to be there to fix it. That's all peace of mind. That's all state. You're in good hands.
Yeah.
And that requires us to think like actuaries and price the portfolio. We're still looking at the customer and identifying what's a sweet spot customer and positioning and all of that. But we also know what the rails are, how a customer can, go off or do really well, and we can price that portfolio as a group. And that's what changes in this model. So it does blow up some of the tenets of value pricing.
Okay, and Ed, you started the conference by saying, group number one, how would you subscribe to a shoe or a pair of shoes? Table number 2, how would you subscribe to a roof? Table number 3, to a refrigerator. And you're picking these items that you wouldn't think a subscription.
Right.
But there's a significance to that. What was the significance of the exercise?
Yeah, the fact that if you start to apply some thought to it, there are some things that you would subscribe to if given the right reasons for them, right? And the purpose is in understanding. I mean, one of the reasons why we choose roof as an example is, would you subscribe to a roof? Meaning you would own your house, but not the roof. Like the roof would be, somebody else would own the roof, but you subscribe to the roof. What would make you do that? And the groups came up with some really terrific examples of why they would do it. Talking about, well, maybe the roof is solar panels, and what we're going to do is make sure that we're up the latest and greatest technology, and we'll then sell that solar energy back to the grid because we can put those things in place. But we'll be constantly updating that technology as it exists. Some people might say, yeah, I'm all in. I'll subscribe to the roof. And what are the ancillary stuff that you need to build around that? Because it's not really a roof, right? You're not subscribing to a roof. And the example that Ron loves to use on this is when we talk about cars, and Porsche has this now with the Porsche Passport. You don't subscribe to a car. You don't subscribe to a Porsche. You subscribe to Porsche. You subscribe to the company. Right? And whatever the company does, that's what you're subscribing to. And then this has major implications across the entire sector of professional firms, because it completely destroys the silos. And I'll let you pick up on
No,
on
and it creates a lifetime annuity, and it creates a more valuable firm.
Right.
And that's really key. And there's an outfit that sells floors now. So not only do you not have to own your roof, remember Team talked about the company that will come in and sell you a floor on subscription, but it's all about creating that customer loyalty and that lifetime annuity. And that's really what you're doing with the subscription. It's not about the services. We've got to stop pricing services and start focusing on the transformation to the customer and that peace of mind. Whatever the model is, peace of mind, convenience, front of the line, whatever.
Right.
That's what we're focusing on.
And some subscriptions could be for the purposes of serving the masses, right? And some subscriptions could be the total opposite.
Absolutely.
Because you're saying that for professional firms, it might be the opposite. Like we have to switch to subscriptions to serve less customers, but serve them more.
Right.
So if I have a successful accounting practice or professional services practice, I'm charging by the hour or even value pricing. Why do I even need to look into this if my customers are not asking for it?
Because so many firms are doing it already, especially in the area of client accounting services. They're doing the monthly subscription. And I just think that more and more type of accounting services are going to be offered in this manner. And then once the train leaves the station, you can be on it or under it.
And my challenge is trying to understand the difference between a value-priced or custom fixed-priced accounting service that's all-inclusive, that includes a set of services with a scope, because there always has to be a scope, some sort of limitation. How do I differentiate my current monthly accounting services that include X, Y, and Z with someone that subscribes to my practice? I'm trying to delineate the difference between a fixed monthly service and a subscription.
Well, I think you could have different models. I think you could say, hey, you could subscribe to tax services, and if you get audited, we'll be there for you, whatever. You could subscribe to tax bookkeeping, and maybe audit something else. But I think once you start going down that road, you're kind of missing the point. I think it's really important to do a concierge service and say, hey, if you really want to go all the way, you'd say, hey, we'll just take care of anything that comes up financially that we're capable of doing.
And can we do a hybrid model when we're getting started? Can we have a group of clients that are subscribed and get a specific set of services and access, and the other traditional ones until they get to it? Is that even feasible?
Yes, that is feasible. In fact, that's what we're going to talk about next after the lunch break. But yes, that is definitely feasible.
That's perfect. Thank you very much. So anything else you want to add before?
No, we just want to know what's been some of your takeaways or epiphanies or what we like to call BFOs, blinding flashes of the obvious, from this program.
Well, we were. You asked us, what would this look like in your firm? And I've been thinking about one of the companies I love, which is Costco, and I love the fact that you don't know the price of stuff until you're physically in, and you can't be physically in until you're a member. That has some psychology to it. So I like that. I'm trying to figure out what that looks like to me, and then when I'm describing that, Ed said, what does the 8-pound mayonnaise look like in your model? Right. And I didn't think about that, but immediately I thought, because I had to give you an answer, I thought that up to this point, I've been looking at what I've done in the past. How do I repackage it? But I think that my opportunity is to look at everything that I haven't done yet, right? Like the blanks. If I make a histogram of everything that I've done, I think the answer is somewhere between what I've done and what I haven't done. So I think that maybe the opportunity is on just not even looking at accounting as traditional accounting services. Look at what accounting is for, which is to keep your life in order financially. So that may not be debits and credits. That may not be a bank reconciliation. It may not be QuickBooks consulting. It may be something else. I don't know what it is. But if I want to be different and I want to call this a subscription, it can't be a repackaged monthly service. It has to be something beyond.
Right. And one of the things we haven't talked about is if you don't have the capabilities under your roof, you could still joint venture with other providers. So maybe, you said you want to keep the client on a financial straight and narrow. Well, maybe they need financial planning. Maybe they need tax planning, estate planning. Maybe you don't do that. But you could partner with other firms that do and still operate on a subscription model.
So build a network of other people that can do it. And if they all belong to the network, maybe they subscribe as well, their clients, and give you cross access.
Right. Right. I mean, Ed, you came up with a great idea. I thought one time when you talked about this, that your Sage partners and Sage could align their subscription pricing and just kind of share it.
Right.
I thought that was brilliant.
Yeah, it's a long way off if it happens, but you certainly could. You roll it all in to one thing.
You guys get paid for what you provide, and the partner gets paid for what they provide. Yeah, I think that's a great idea.
Yeah.
So other than subscribing to your podcast, to the Soul of Enterprise, and subscribing to the Patreon site that gives you access to the sort of the insider information, some of the in-between episodes, outtakes and stuff like that, what are the resources you think people need to be looking at? Maybe books, or do you have another event coming up where you're going to keep talking about this?
Oh, we will continue to talk about this for sure.
This is the first of many. We're talking about this. This is our retirement plan, because we know there's going to be like a long tail of adoption.
Right.
So it's going to be. But I think that the place that I would go if you only take one book would be Teen So's book, which is called Subscribed, and visit his website, his company called Zora. Just a fantastic book where he lays out the reasons for this business, why it works, and all of those examples that we talked about earlier in that book. So that would be the place to go.
That's perfect. Thank you very much, guys. Remember, the Soul of Enterprise, best podcast out there. They talk about value pricing from the get-go, and now they're starting to talk about subscriptions, and sprinkled throughout there's economics and tons of life lessons and business lessons that you couldn't learn anywhere else.
And
thank you, guys.
Thanks, Hector.
Yeah,
thank you.
Bye.
Awesome. Cool.
Bye. Awesome. Thank you for doing it.